Hey traders, in today's video, I'm going to share with you how I trade from my favorite type of price chart. Hey traders, welcome back to another Forex Market Preview video. If you guys are new, my name is Akil Stokes. I'm a Forex trader as well as the head trading coach over at TradeEmpower.com. And well, this is a weekly video where I typically look through the markets and share with you a few of the trading opportunities that are on my radar for the week ahead. However, today I'm going to do something slightly different. You see, I've been away. I've been on the road for the last 4 days, really. So I'm really out of tune with what's going on in the market. I haven't looked at a price chart since Wednesday. There was a non-farm and jobs numbers on Friday. So I'm not really sure what has been going on. And really, I'm not really interested until Monday. We also have the French elections today, and it's an election that's going to be very similar to what we had here in the U.S. Last fall between Donald Trump and Hillary Clinton, where one party is heavily expected to win by about, almost 60-something% to 30%. However, there is that surprise factor that could happen. If the other party does win, that type of news can really shake up and rock the market. So I don't want to waste any time doing analysis until I see how the markets open and how the markets react to whoever the winner may be. So what I'm going to do in today's video is I'm going to share with you a trade that we took this week in my live trading room as well as our Syndicate program, where I used a different type of chart. Typically, you guys are probably used to seeing minute charts, 4-hour charts, hourly charts, any type of chart that ends on a time-based type deal. However, my preferred style of trading is really to go down to a chart that is more price action and movement based than time based. And for me, I prefer the range bar charts. So I'm going to share with you some analysis of a trade we looked at, or a trade I took, actually, a pretty profitable trade, and show you how I go from the time-based charts down to the range bar charts and really put it all together into what I consider to be some pretty decent trading opportunities. All right. We're going to start on Aussie dollar. Aussie dollar on the daily. We're going to work our way all the way down to a range bar chart. Now, Aussie dollar on the daily, this has been an interesting pair because we've been fighting with two structure levels depending on what time frame you're looking at. We've had breaking closes belows. We've had false breakouts, right? You can see we came down here. We talked about this pattern formation last week, right? How it's a breakout technically, but you see these weak candles, and we saw a retracement back up to this consolidation level. There's now, right, we go down to a lower time frame. I'm going to rush, wrong time frame. Not the 2,400 minute Akil. That's going to look weird. The 240. Gabrielle says she went short, 75.35. You can see that price action has consolidated down here. That's that area we just identified on the daily. We came back up. Where did we come back up to, guys? Look left, what leaves clues? Structure leaves clues, yep. Came back up to previous structure, and it's hard to see on here, but we put in a little move like this, right? New structure high, outside return, new structure high, again, running into this minor structure level. This is going to be a lower low, lower close on a lower time frame. And the move that I would be looking for, right, this morning is a retest of structure and a continuation back down to about this level right here, about 74.91, 75 evens right above there. But 74.91 is going to be the level to retest. Again, we draw a straight line out here. That's kind of the top of this accumulation zone, boop, 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 and kind of previous structure support as well. So looking to get short on the Aussie. Now we go down to a lower time frame. Again, what I just drew out looks a little bit cleaner here on the hourly. Again, what would we say? New structure high, outside return. We put in a little head and shoulders formation here, right? Head and shoulders is a reversal pattern, right? We then did what? We broke and closed below the neckline. And we would be waiting for what, traders? And again, if you guys are new, I like doing a lot of call and response. Don't get me wrong, I love to hear myself talk. But I like to ask you guys questions. I like to ask you for input. That way I just make sure you're still alive and breathing out there. I can't see your faces, so unlike a live presentation that I would do, I can't see if you guys are falling asleep or you're just in awe, so I gotta kind of probe. Yeah, so we would look for retest the structure and then a continuation down to the downside. All right, so looking for a pullback in the structure, right? Our structure level starts technically right here at about 75.18s. All right, our kill zone, this was the conversation we had yesterday about the difference between just having structure and that technical kill zone. Our kill zone is going to be between 75.22s and 75.33s. So we can go down to our 5-minute chart. Again, I prefer range bar charts, but you can probably look at both of them. You can even see a mini kill zone right here for an aggressive short. But we're looking for that retracement back in the previous structure, right? Back into this yellow box here, and looking for a reason to get short. Now, range bar traders. All right, so before we hop into the range bar chart, I know many of you guys are new. This is the YouTube channel. We try to keep it as basic as possible. A range bar chart, instead of moving on, instead of the candles closing, I should say, on a specific time, as in an hourly chart where you get a candle close at the top of every hour, or a 5-minute chart where every 5 minutes, right, 5, 10, 15, 20, 25s, right, the candle closes. On a range bar chart, and you'll see this on tick charts as well, but on a range bar chart, a candle doesn't close until price action has moved out of a certain range. And what it does for me is it tends to make the price chart a lot more smoother to analyze. Instead of seeing some really big candles, those big moves are broken up into a lot of little candles, where instead of seeing just really choppy movement where the market just goes sideways for a long period of time and just makes your chart all disgusting looking, you guys know what I'm talking about. We actually don't have any or very minimal candles printed on the range bar chart. So it just gives me a different perspective on a price chart. And for a price action and structure based trader like myself, it really allows me to see a clearer view of the opportunities that are there. Now, I'm not saying that range bar charts are better than tick charts. They're better than minute-based charts or anything like that. It's just a personal preference. And as you'll see in trading, there's no real wrong or right answer. I guess if your strategy doesn't produce a profit, that's a wrong answer. But there's no one right way to trade it. It's really up to you as a trader to find something that fits your personality, find something that you're good at, and really master that type of trading. So I just want to get that quick explanation out before we hop into the range bar charts, and I get a lot of questions underneath this video. We'll now proceed and back to the movie, I guess. All right, again, you can load up your range bar chart, and we're just going to wait to see if price action retraces back up to this level. Now, do you notice anything that, or I guess we can say this, what could happen here? This is something we talked about in our strategy lab probably about a month ago. What could we see here? Because again, we want to stay 1, 2, 3 steps ahead of the market. We don't want to necessarily react to what the market's doing. We want to kind of predict and wait. So price action came down. There we go. RSI swap. Yep. Price action came down. RSI went oversold, right? You guys see this? Hopefully I don't kill them. There we go. RSI went oversold. I've got a big, this TC arrow, this green arrow here means oversold, right? Something that I've noticed that I've been working on, I'm probably not ever going to have time to test it the way I want to, even though my busy season is almost up. I've got about 5 days left of what I call my busy season, but usually I get even busier after that. But one thing that I notice is you get some really good trading opportunities when you get an RSI swap. I don't know if there's a word for it. I just call it the RSI swap because that's what our 12-weekers, our transformation members, came up with. But when you get this swap from RSI being oversold here to an RSI being overbought on the pullback, So that's something we can certainly look for a trading opportunity. Look for price action to retrace up, look for the RSI to go overbought, and then look for that entry reason to sell it. And again, we can aim as far down as obviously either a retested structure right here at 75.14s or about 75 flat. And that 75 did it again. That 75 flat looks to line up with a Fibonacci extension level. It's going to be a 127 and a 1414, I believe. So 120, 1414 from here, or 127 from there. 1414 right at 75 even. And then we bring a Fibonacci extension from our bigger swing up here, our swing high, to this ultimate swing low. Boom. That should give us a 127. Yep, 127 right there. So that is how I'm looking to attack Aussie dollar. This is a basic trend continuation structure-based trade. Again, this is how I like to use the range bar charts. Sent out a tweet this morning saying that the markets are junk, so hopefully we can find some stuff on the range bar. I really like using the range bar charts for day trading opportunities like this. And essentially what I do is I go through the same IPDE process. I just go to a different type of chart, but I identify what the market's doing. I predict which way I think the market's going to go, and then I go down to this different look of a chart to look for opportunities to get involved in that direction. So any questions about Aussie dollar? We have about 2 minutes before our war room meeting. I know it came quick, but I spent a lot of time talking about news and really going over this pair. But any questions about anything we just went through? The higher time frame, the head and shoulders reversal, the pullback. Hey gang, Akil here. I want to come back quickly and just update you on the trade we talked about this morning in the live room. And Syndicate members, if you remember, this is the Aussie dollar trade that I sent out as a quick hit video to show you a little bit what we're looking at during our day trading times. It took a while to get up here. Price action really didn't move much during the day, but you can see eventually price did make its way back up to our previous level of structure. The 75.33 level, the RSI did go overbought, and I did enter the trade a little bit higher at that moment. Now, price action did retrace a little bit deeper. It looks like we're going to probably hit a 1618 Fibonacci inversion back here, but it's quite fine because stops are going to be above our previous structure highs right here. So we're going to see if we can get down to our 75 even handle. I'm going to go ahead and look for some secondary targets as well once I do the rest of my nightly analysis. But wanted to give you guys just an update on the trade that we looked at, showing you that it has rolled over, and hopefully it'll end up being a profitable one that I can share with you. All right, traders, Akil here. It is Wednesday, 6 a.m. and wanted to just check in and keep you updated on the Aussie dollar trade that we've been tracking. If you guys know, it's been we've had slow markets lately, really the last week, and I expect another one today as we're approaching our FOMC meeting and ECB press conference and non-farm payrolls, and just everything is coming, and typically the market kind of slows down before that storm. So we've been having some fun and just tracking a nice little range bar trade here. But as you can see, we did come down. We did hit our 75 even level for target ones. We smashed right through there. Well, we didn't smash right through there. We came down to that psychological number. You can see a little bit of reaction, pull back into previous structure before extending down to our 1618 level, showing another little bit of little respect right here, another pullback, right? And extending even further down. So it's been a pretty decent trade. And what I've been doing, I've just been rolling stops with this, having some fun and just trailing stops as we go lower and lower. Now, I do have an ultimate destination. If we head over to our chart over here, our 60-minute chart, the ultimate level that I'm looking for is a retest of our inverted head and shoulders formation. So if we look back at the analysis or the junk on your screen, this is a head and shoulders formation, an inverted one, meaning it's upside down, where you have your left shoulder, your head, your right shoulder right here. And you can see that our DSR zone, our dynamic support and resistance level, starts right at our right shoulder, that level that our left and our right shoulder come into. So that's going to be a nice level to shoot for our extended targets at, right about the 74.62 level, and not get greedy and get the remainder of the position off of this trade. Again, I don't necessarily think that we're going to continue lower. It looks like that on the 60-minute time frame, but if you remember the higher time frame analysis that we did, we still really kind of held that structure level. Let me just double check that first. I sometimes get Aussie and New Zealand confused. Oops, that's not the chart I wanted. Give me a second, guys. It's early in the morning. I just woke up. I didn't just wake up, but it's early in the morning. Yeah, yep, so I was right. This is Aussie. So yeah, so we'll go down for that 74.60 level, see if we can remove the remainder of our position. But either way, nice looking trade, a good trade to show you guys as an example. And more importantly, it's not an example of just a winning trade, but it's an example of how patience is needed in the market. Again, this was something that we identified early in the morning the other day. And it took me really waiting until last night to find an entry on it. And that just means sticking with the trade. Now, I'm not going to count this for our Syndicate program because it's technically a day trade. And, I only try to post day trades for that program during between 8 o'clock and 11 o'clock. That's when we have our active live trading room hours. But it will count in my personal trading, which is good. And I will be able to fund my personal account a little bit as well, both here and both on my other deal, other system. So it counts for me. It just won't count for the track record that we're keeping with you guys. But that's not the point. It's not about how much profit or pips are made. It's about the process of trading that we're trying to show you each and every day. And little lessons like this are the ones that you should keep track of if you want to become a long-term, independent, consistently profitable trader. So see if we'll get down to the 60s for target twos. Worst case scenarios, we're going to, hit target ones again and get stopped out. But I think there's a good chance we'll go down there and hit that level down at 63. So appreciate you guys joining me for the ride. And I love doing these type of follow along videos because they're fun to see how just trades evolve over time. We touched it. We didn't get filled. I need one more pip. So if we spike down again, we can close out for market and get the rest of this trade off the table here. I probably should have been paying attention. There we go, 63, bang, perfect, perfect. So nice trade on Aussie dollar. Made about 35 pips, 30 something pips on target one. Made about 60 pips on target two. Almost 100 pip trade in between both positions. Not bad for a day trade, right? Not bad for a simple day trade. Not bad. All right, so pretty cool stuff right there, guys. And again, this is one of the trades that we took in my live trading room. And if you guys are interested, we still have the free trial going on for traders out there that are struggling, right? Because they're lonely and they find themselves convincing themselves to take trades or breaking their rules, just, all of the bad habits that occur where you're trading by yourself and no one's there to hold you accountable. I recommend hopping in our live trading room. We have a London session and a New York session where you can come together with a community of other traders. You can get more eyes on the market and you can really be held accountable for your actions. We have a great group of experienced traders in there, along with some newer traders as well. And I'll tell you what, the experienced traders do a great job of just keeping the newer traders in check, as well as sharing their experiences of what they've gone through to, in their trading journey up to this part. So I certainly recommend it. Trading is boring by itself, and when boredom happens, mistakes happen. So involve yourself in a community, involve yourself around like-minded individuals, positive influences, and you'll most likely see a positive effect on your trading. And for you guys that can't dedicate 3 hours to spending that type of time in a live room, there are other options. We have our Syndicate program too, if you're still looking to stay up to date on a daily basis about what we're looking at in the market and kind of the psychology of how our trading is doing and really how we're handling that, whether it be a hot streak or a cold streak or just a no trade streak. So links for those are in the description box below. And as always, I appreciate you guys joining me for this video. Until next time, plan your trade, trade your plan. Good luck in the markets this week. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradeEmpowered.com website, or also take a look and you'll see more videos available for you. Have a good one.